We are joined by the legendary silver guru himself, David Morgan, founder of the Morgan Report, author of the Silver Manifesto, and one of the most trusted voices in the entire precious metal space, and really my go-to whenever I need to know what's happening. Look, silver has exploded in 2025, hitting close to $84 an ounce in a historic rally before today's sharp pullback amid profit taking. With physical premiums soaring in Asia, massive demand from industry and investors, and shocking news of China's upcoming export restrictions on silver starting January 1st, is this rally the real deal or just a temporary blow-off? And what does it mean for silver prices ahead? Here to help me understand what's going on is David Morgan. David, happy, what do we call this no man's land between Christmas and New Year's? Twilight
Happy
zone.
holidays.
Happy holidays, David Morgan.
Well, happy holidays to you, and Merry Christmas to those in the past. We're past that, and happy, prosperous New Year to everyone.
Yes, exactly. Happy, prosperous, indeed. But first and foremost, what in the world is going on, David, with silver?
Well, for someone that's been in this market for so very, very long, it's not all that surprising. I mean, I coined the phrase, silver will scare you out or wear you out. I mean, there's periods, almost 20 years where after the 1980 peak and then a subsequent high price, really, it went to 50, and the average price in 1980 was $21 per ounce. And then it drifted down to $5, and it stayed around the $5 level for almost 20 years. And, that's a long time to wear you out. I don't think there are too many people thinking about silver for that 2-decade period. But the point I'm making is that it'll scare you out. In other words, it can make these very, very big moves very, very quickly and exceed the expectations of the most ardent bull at times, only to do what it just did on this open, which means we went from, I think, 84 in the access market, and then by the time it got to the New York market, it already dropped like $10 or something. We're still doing this recording as that day's trading has really got several hours to go. So who knows where it's going to close at today.
Yes.
So I'm really not that surprised. Personally, I think silver's kind of gotten ahead of itself. We've had these massive moves up, and it's only natural, really, for any market, silver included, that you will see, a back and forth at some point. And I've warned everybody, once this bull market starts again, that the primary purpose of a bull market is to shake off as many investors as possible all the way up, so that whenever this market peaks, there won't be too many that rode that bull the whole time. And I am fairly certain we have not seen the ultimate peak in silver yet. There are many that are advocating that's the case. And, you should take all of your silver profits and move it into Bitcoin, and all kinds of stuff's out there on the web. I don't pay attention to too much of that, but I have to in a way, because I get so many questions from, the general public, but primarily my membership. David, is this true? Is this false? Is this real? What's happening? Blah, 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 blah. And there's so much misgist and skewed information out there that's very difficult to keep up with it all. As far as separating the wheat from the chaff, I'll say prided myself, but I've done my level-headed human best to stay steady on the tiller, take the strong course, the even way, and not get too emotional, because as things move like this, the emotions come out. Surprisingly, a lot of my members that are more conservative, meaning, they don't really use leverage, they are in for the long haul, their expectations are realistic. Several of them have gone in and asked me about options tradings and what kind of, spreads would I use. A lot of them, not a lot, but more than I've ever seen before, are asking, what's a good way to leverage these silver investments. And to me, that was an indicator that we're going to get a pullback, and we're going to get one, fairly quickly. Here we are.
We'll jump right back to the interview, but this is too important to skip. The real risk today isn't just a market crash or recession, it's the US dollar being reset, revalued, and losing all purchasing power. Prices keep rising, incomes can't keep up, and central banks around the world are buying record levels of gold because they see what's coming. You can't fix the system, but you can step out of the line of fire and position yourself the same way they do, like a central bank, not a common investor. That's why we built the Private Wealth Playbook. It's free and it shows you exactly how to protect your wealth, privacy, and retirement through whatever comes next. So click below or go to DannyReport.com and secure what's rightfully yours. You raise a really important point. It makes me think, should we be viewing silver the way we view gold? In the sense that, at least for myself, right, I have a long-term vision of holding gold. I'm not trading gold. I'm not in and out of gold. So when people come to you and say, well, should I be taking some profits from silver now and allocating it to, whatever, should I be, I guess the question is, should I not get too greedy when it comes to silver price?
I think, obviously it's a personal choice, but moving on the thread you outlined, Danielle, that's a very good one. I mean, gold is, pretty established. The central banks buy gold. They've been doing it rapidly the last couple of years. That trend continues. And it really is the monetary stability, whereas silver as a partially monetary metal is much more volatile, much more emotional. It's sort of looking at the Dow Jones versus the NASDAQ. I mean, if you remember in the tech wreck, I think the Dow went down 20, 30%, if I recall, but the NASDAQ went down something like 80%. So that's a good analogy for the gold and silver markets. So I think your core position, especially the older you get, should be gold. As far as silver is concerned, I think you should treat it as more volatile and act appropriately. So let me just outline what I've done for many years, and that is my core position is like 75%, and with 25%, I trade around that, trying to catch, not day trades. I blow myself up doing day trades, but position trading I'm pretty good at. And that is where you take, a breakout at 50 and just hold on to it until it exhausts. In other words, you keep moving your stop up as the market moves in the direction that you thought it would. So that's something you can do. It does enforce the idea of taking a profit. Now, I've got a core position that I'm not going to sell until I think, we've gotten there. And just to add on to that a bit, it's very difficult to measure where do I sell my silver, where do I sell my gold, because I'd say 90% or more of the population, regardless of nationalities, looking at how many yen is it worth, how many Canadian dollars, how many US dollars.
Yeah, right.
And that is the absolute incorrect way to look at it. What you need to do is look at it in how many barrels of oil, how much real estate, how much in the stock market. That's what you want to know. And silver and gold are very underpriced versus the stock market. So let me go on just a minute longer. If you were in the Weimar Republic during a true hyperinflationary blow-off, a hyperinflationary depression, the stock market went up and up and up and up. So people thought, oh, I'm doing good. I don't have my money in the bank, at least I'm in the stock market. And it protected them somewhat. But if you did the gold stock ratio, what you would find was gold and silver were the only thing that kept you above the inflation rate. Stocks did not. So from that, we could say perhaps that we could see a blow off in the stock market going up and up and up, but people feel good because, the dollar is declining or gold and silver are moving quickly and they're okay because the stock market keeps going higher. But relative to gold, that's what we want to look at. Where is it? And that, again, is what you really need to measure. That keeps you grounded. That keeps you in a basis of the real value versus what is the paper price. Not saying that when you cash out, you don't get, fiat in exchange for it. I understand that. But it's what is the ratio? Is my silver overvalued in real estate? If it is, well, maybe I should take a look at selling silver for real estate. Is it overvalued to stocks? If it is, maybe I should consider selling silver or gold for stocks. Okay. And that's really, in my mind, the only way to keep grounded and look at it objectively. Otherwise, you're just looking at a number that could be printed to infinity. I mean, honestly, all fiats can go to infinity. Look at Zimbabwe, you look at the Weimar Republic, you look at what happened. Can't name them all, but in my book, The Silver Manifesto, I think we had 8 of them in like the last 20 years, and that book's like 10 years old. So, I mean, this is not something that's a one-off and once every 100 years. It happens fairly often.
And that's so well said. And that kind of brings up the next point, because I'm sure you got bombarded with, well, if you don't think this is the all-time high, David, is it triple digit silver? Is it in the thousands? And we see all these, people throwing out random numbers, but is there a way, what calculations could we get to a realistic number? What can we look at that could really make us think, okay, silver could realistically be headed to whatever, 120, 150, whatever it is?
Yeah, I think the only way to do that is one of the factors that is not used by too many. I think if you look at the better analysts in my peer group, and there's several, and they're very good thinkers, and they really
Yes.
know their stuff. And shout out to all of them. I can name them, but I'll leave somebody out and they'll be upset with me. But it's really the gold silver ratio. And so right now we just got under 60 briefly. We're probably well above that now with today's sell-off.
Yeah.
But I think as a minimum, you'd want to see a gold silver ratio at 50. And at that point, maybe that's all it's got this time. I don't know. In a major secular bull market, you usually do better than the best you've already seen. And the best we've already seen is somewhere between 31 and 33, depending on whose data you take. So I'll call it 31. So I think that at that point, I'd really take a hard look at, is this all it's got? But silver tends to outperform gold at the end. And I don't think we're at the end. So could it go to 16 to 1? Yes, it could. And if you sold, everything at 33 to 1 and silver doubled from there, you'd be upset with, me telling you to sell or whatever. But nonetheless, the way I planned it, and I'm going to write about it for the members, the premium people in January, I'm going to make 2 PDFs that they could print out on a projected move to a certain amount and what you do on the way up. Because the last thing you want to do, first of all, to pick the top is an amateur's game. I've done it. Call it luck, skill, or a combination thereof. I don't expect I could do it again. But if silver goes to 100 and you start filtering out at 75, and then it gets to 85 and you sell some more, and let's say it gets to 90 and it never gets to 100. Well, you have to have a plan on the way down, because you don't want it to go from 50 to 90 and back to 50, and you rode it all the way up. You're fine. You're one of those people that bought it at, near 50. And held it forever. And you watch it go to 50, you watch it go all the way near 100, and it came all the way back to your round trip. And you've paid the pain of holding it for 20 years or 50 years or whatever it is. You don't do that. Yeah, you're trading it for fiat. I'll take that fiat and put it in something else, So I just want to make that point. So I've got 2 plans. I've already given it to my members on a video. I do videos during the week. And just kind of update them, because I work for them. And there's so much stuff. I know I'm talking rapidly today, Daniela, but you also know there's just stuff flooding in. They've got this AI guy that's the Asian AG guy. And a lot of
that to us. What is that?
Well, it's an AI, and it's well done. And what's interesting about it is about 80% of it's the truth and about 20% is totally complete BS. And I'm doing another show that we're going to go into great detail of some of the quotes that this guy used. And what's interesting, in one of these videos, he quoted some of the subsets of the CME's regulations.
Yeah.
And he actually quoted one that's correct number. But what he said about it is absolutely ridiculous. It has nothing to do with what he said it was. And so there's a lot of that going on. So you just have to be careful.
I just can't believe how big that has become, I think is, but wait, I want to come back to the CME, but I just want to highlight what you said there. You need a plan on the way down.
That's the point. Everyone thinks about, I got to sell at the top. But what if the top isn't 100? What if the top is, 200? You have to have a plan to exit with a profit. I mean, what's the point? Now, most of my followers, and I'm in this kind of the same mindset, is, well, if I sell silver, what do I go to? I don't trust the dollar, right? And that's a tough one to answer, but you can go into a hard asset. You could go into real estate. Yeah, but real estate's overpriced. Okay. You could go into the stock market. Yeah, but stock market's overpriced. So it's difficult, but still, you've got to take a profit. Even if you move it into the bank and keep it in fiat for a volatile. It's not going to disintegrate in one day unless you have a bank failure and they close the banks and, it's all over. And I don't see that happening, at least not for some much longer period of time. So you got to be reasonable. Your expectations, I think, need to be reasonable, and your exit strategy needs to be reasonable. There's nothing saying that you have to sell everything at the top. And the main thing, again, and it bears repeating, is do not take a ride from 50 to 150 back down to 50. Sell some on the way up, and if it starts to reverse, you've got to continue to lock your profits in. And that, again, is what I've outlined. I'm putting it in the report. I'm going to make it PDFs again so people can, print them out and laminate them, stick them on their bulletin board or tape them to their dashboard or trying to be funny. But, they've got a plan.
Yeah,
And
because
it's a guideline. It's
of course.
Not, David said 75, it's got to be, no, 75 is a guideline. I'm not going until 80 or 70 is good enough for me or whatever the case may be.
Right. Yeah, because it's a lot of fun riding it up. Everyone's having a good time, right?
Right.
Until we're not. So that's really sound. Okay, on the topic of the CME, there's a lot of, in the underground voices say, well, the CME keeps raising margin requirements, and that's why we keep seeing these kind of like smackdowns in silver price. Any truth there, David, or are you hearing anything? Or
Yeah, no, that's true. I'll interrupt you. I mean, it's very, very common in the futures markets, all of them, that if things get out of control, the exchange will increase margin requirements and flush out the weaker hands that don't have the cash available to meet the increased margin requirements. And that happened in the palladium market years ago. I'd have to look. I was much younger at the time, but believe it or not, in the palladium market, when it really took off because it was physically driven, what happened in palladium was it was a really decent price. It was a much lower price than platinum. Ford Motor decided to switch their catalytic converters from platinum to palladium. It was a cheaper way to go. So they just, called up and said, well, we're going to buy this much palladium. Like, what? That doesn't exist. And it did, but barely. And I'm exaggerating it a bit, but the palladium market just took off. So what happened was margin requirements got lifted and lifted and lifted. And at the top of the market, you had to put up 2 times the cash price to keep a futures position, which is ridiculous. So yes, it does take place. Yes, there's a reason for it. I'm not going to evaluate whether it's right or wrong. You can make up your own mind.
I think it's interesting how we have this narrative here happening in North America and a completely different story happening in Asia. Physical silver prices in Asia, especially on the Shanghai exchange, have been trading at huge premiums, sometimes $8 over global spot. What does this tell us about real physical demand versus the paper markets here in North America, David?
Well, it indicates that there is an arbitrage opportunity. I mean, anyone that owns physical silver could, in theory, ship it over to Shanghai and make a huge premium. The problem is how much of that's, could actually be accomplished. And that's where, no, I don't think anyone has a real answer. I'm sure people that are, metals dealers will know. But as that opportunity unfolds, and if it's real, then those arbitrage opportunities don't last very long. In other words, if it could be done, and I'm not saying it can't, that gap would close pretty quickly. And since it's not closed on the physical end, it's closed more or less on the paper side, then that brings into question what's really going on. And I suspect that there's more hype in the market than that we need. There's a lot of misinformation and what the true allocations are. We do know for a fact that the amount of silver on the retail side has been net sellers even now. So there's refiners that are backed up that are only taking $9.99 buying silver. They will not take, silver coin because it takes a longer time to refine it. What's being taken into the refiners is being produced into 1,000-ounce bars, good delivery bars for the CME and the LBMA. And for Shanghai. And so there's a bit of a backlog there. So will we get equilibrium? And the answer is, I don't know. I suspect that we will. And what will that look like? On the other hand, silver can do things outside of almost anyone's expectations, and even mine. So we could get in a situation where, let's say the Asian markets, India and China, both continue to buy on a monumental basis for both industry and investment, and the demand can't be met. So I'm not ruling out either case. What I am suggesting is that this arbitrage opportunity, I think, is more theoretical than realistic because they don't last very long. It's this sort of closed again from the paper side. I'm suspect of what's really going on.
Nice. Yep. One more point I want to get in here, ties in here, because China is implementing export restrictions on refined silver starting Jan 1st, requiring licenses and effectively limiting supply from the world's dominant refiner. How significant is this for global silver availability, David? And could it trigger an even bigger squeeze?
No, it's way, way overblown. What is misunderstood is that the market, or some people in the market, thinks that it means that all silver will not be exiting China. That's far from what it says. What's going into effect is a license that's required to export silver. So it's kind of a one-off case. It's smaller than the perception out in the blogosphere. So if you are someone that's exporting silver out of China to India, as an example, and you're doing it right now, what I'll call the black market or the free market, how you want to term it, then now they're going to try to license, China's going to try to license everyone that is exporting silver, and there will be restrictions on it. So they're getting a better handle on what is leaving China, but it's not closing it down. It's not stopping it. It's nothing like that. Don Durrett, I think, addressed this, and he's pretty well known on X and other platforms, and others have. A lot of the stuff is getting, especially new silver investors or even old ones, have been in the silver position for a long time, and they're just really, fatigued because they've waited for so long. And here we've got a lot of enthusiasm, a lot of movement, a lot of momentum, and every little piece of information, true or false, gets them overly excited and puts it in a context that is really unrealistic. So yes, the licensing will take place. That's a fact. Will it have a huge impact on the market? It will not.